Morning, guys. It's Tuesday, September 9th, 5:24 a.m. Central Time. Grain markets are mixed this morning. Pretty quiet overnight trade. December corn futures down a quarter cent at 421 and a half. November soybeans up 1 1/4 at 1035. December Chicago wheat down a half cent at 523 and a quarter. December Kansas City wheat down 2 1/2 at 514 3/4. December spring wheat down 2 3/4 at 574. We've got some soybean news to start. Let's go there.
So China ramped up its soybean purchases in August, importing 12.3 million metric tons, a record high for the month. The surge comes ahead of the U.S. soybean export window. According to USDA data, last year, China imported about 2 months worth of its soybean needs from the U.S. However, the ongoing U.S.-China trade war has caused the nation to rely more heavily on Brazilian beans. As of Friday, China's soybean stockpile stood at approximately 6.8 million metric tons, the highest level since March.
We've got a couple of charts we're going to look at here. Then we're going to talk about the farm economy and the tariffs. So seasonally, that was a record import number for China based on China customs data for the month of August, soybean imports for the month of August. And this is from all destinations. Last year, they were similarly very, very high. But the last 3 or 4 months, I mean, we've had record seasonal prints for 4 months in a row or something like that. The spike in imports this year began in April and into May, which is pretty normal from a seasonal standpoint, but it did accelerate and went above and beyond anything that we had seen. Part of this is because Brazil had a monster crop last year, and part of this is because of the tariffs. The Trump trade war liberation day stuff happened in April, and I don't think it's a coincidence necessarily that China increased imports from Brazil and not from the United States following the tariff stuff. This is something that you need to be aware of. According to USDA projections, Brazil is going to export 112 million metric tons of soybeans during this now new crop marketing year. China is going to import the exact same amount of soybeans to the bushel, 112 million metric tons, and that's from all destinations. So you could make the argument that, hey, Brazil can now supply China with all of its soybean needs. And yeah, theoretically, mathematically, they could. From a seasonal / logistical standpoint, I'm not sure that it works out that way. I think you could still make a pretty strong argument that China needs to buy soybeans from the United States for the delivery period, October, November, December, maybe into January. Let's just assume for a minute that that's not the case and that China buys nothing from the United States. You've got another 74 million metric tons of soybeans that the world imports, and that's world minus China imports. So the rest of the world, China's the biggest soybean buyer, but the rest of the world also needs beans. And I think that if you were to run into a situation where China just totally avoids U.S. soybeans, which is looking maybe more likely now. It's I suppose it's becoming more possible. Other global buyers are going to have to come to the United States for soybeans because Brazil's not going to have the beans that they need. So there may be kind of a reshuffling of the export flows here. I know that the commenters, which have been fast and furious lately, they will jump on and they'll say, Joe, this is Donald Trump's fault. The tariffs and the trade war have something to do with this. They absolutely do. But let me give you kind of a quick synopsis of what's going on in the farm economy and why the farm economy is in a steep recession right now. This dates back to COVID. You've got to start with COVID. During COVID, we had really low prices because of COVID. You know, we stopped grinding corn for ethanol, things along those lines. We ran into some tight supply years. We had some short crops. We had Russia, Ukraine. China actually bought a ton of corn and soybeans from the United States in those years following COVID, following the trade deal. You had inflation. Everything on the planet increased in value, whether it was labor, wages, shipping, everything increased in value. And all of the things that farmers buy increased in value drastically. Everything got way, way, way more expensive. Then you had all these government programs. They sent billions and billions of dollars out to farmers in the name of COVID and other things. And that helped to exaggerate the spike in input prices. Then you had multiple years of just big crops out of both the United States and Brazil. So as I've argued in the past, we are now in the third year of a U.S. farm economy recession. 2025 is the third year. 23 was the first year. Donald Trump's killed the soybean market. Let me read you this. Mackenzie, November soybeans, which is our big benchmark for soybean prices in the United States right now, $10.35 per bushel this morning. You know what they were same date last year?
No, I do not.
10.18. They were cheaper. They were cheap. Beans were cheaper last year.
Hmm.
So to make the argument that Donald Trump and Donald Trump alone is responsible for what's going on in the farm economy is a poor and uneducated argument. There's a lot more behind this. Everything, COVID to money printing, to input inflation, to government farm programs. I don't know that any of it is any one single individual's fault. I think most of it comes back to the fact that we've just had big crops for 3 consecutive years. Let's go to crop progress.
U.S. corn conditions were slightly lower last week, while harvest is now underway. As of Sunday, 68% of the corn crop was rated good to excellent nationally, down from 69% the prior week, but still well above the 5-year average of 58%. The rating was the highest for the week since 2018. USDA estimates that 4% of the crop is harvested nationally versus 5% last year and 3% on average. Soybean conditions, meanwhile, were marginally lower, with 64% of the crop rated good to excellent, down from 65% the previous week, but above the 5-year average of 59%. Last week's rating marked the lowest good to excellent rating for the soybean crop this year. The USDA estimates that 21% of the crop is dropping leaves versus 11% a year ago and 22% on average.
Let's look at the corn ratings. Seasonally, U.S. corn ratings, good to excellent, are very similar now to both 2018 and 2015. We're very close to both of those years. In 2018, the final U.S. corn yield was 4.6% above trend. In 2015, we were 4.5% above trend. If we do a repeat of that and we're 4.5% above trend this year, 4.5% above 181 would be a national yield of 189.1. And we've seen those sort of numbers out there. USDA's got something similar to that. We saw the S&P Global number out, the StoneX numbers just a little bit below that. So you could, based on the crop ratings alone, make the argument that, hey, yeah, 189, 188, that's the number. I don't know that I would make that argument. I think there's a lot of problems out there that the crop ratings are not catching. Crop ratings are a view from the road. I'm not sure that they're catching the disease pressure or the perhaps excessive rainfall that we saw in some areas or limited rainfall that we saw in other areas. I'm just not sure that this tells the entire story. It is normal for crop ratings to deteriorate as harvest approaches. Soybean ratings fell off a little bit, and I think the size of the soybean crop is very much a question. It got really dry in August in a lot of places, and it's just not helpful to production prospects. So you take a couple bushels off the soybean balance sheet, things get really, really tight, really, really fast.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
We did 40 minutes uncut with Pete Meyer yesterday. He talked about the size of the crop. He talked a lot about the Trump administration and things that are going on in the White House. And Pete was fairly critical of a lot of the things going on, not just the tariff stuff, like the obvious headline type stuff, but there's been a lot of inaction, especially on the biofuel front. The administration has talked a lot about helping farmers and how they're so pro-farmer, yet they've done very little. And I think that this needs to be brought to light. A video that we did last week with Shay Folk about fertilizer prices was absolutely fantastic. The fertilizer market, the retail market you guys deal with, is not transparent at all. And through a survey that we did of our premium subscribers and also a whole bunch of other people, Shay was able to provide some transparency to the fertilizer market on a regional basis. He had a map of the entire Midwest basically and had different fertilizer prices at different locations. And just the spreads between some of the pricing and the locations was absolutely phenomenal. It's pretty crazy stuff. It was an eye opener for me because I'm not super familiar with that market. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. $50 a month, if you're a farmer, is a drop in the bucket compared to the monstrous dollar signs that you pay to the big ag companies out there, whether it's fertilizer or seed or implements or crop insurance. And the ROI here is pretty good. We have some videos that will absolutely help you to save money, make money, help to improve your farm's finances. Check that stuff out this morning, guys.
Planting of Brazil's first corn crop is running behind last year's pace. According to well-followed private group Ag Rural, as of last Thursday, 12% of the crop was planted compared to 15% last year. The group also reported that soybean planting is underway with 0.2% complete, whereas planting had yet to begin at this point last year. USDA projects Brazil's corn crop at 131 million metric tons this season and soybeans at 175.
I've got some production type charts stuff I figured I'd show you guys today. Here's soybean harvested acres, Brazil and the United States. Brazil is projected to harvest north of 120 million acres of soybeans this year or next year. In the U.S., we're at 80 million. So Brazil is expanding, of course. Here's Brazilian corn and soybean production, and you can see that soybean production has expanded pretty rapidly. 175 million metric ton crop expected this year. Corn production has more so flatlined. USDA's got this past year 132 still. They need to come up by quite a bit. They've got a 131 penciled in for next year. Here's soybean production, Brazil and the United States. And you can see that over the last 5 or 6 years in particular, Brazil is really expanding, whereas the U.S. is very much flatlined. When it comes to corn, it's a different story. The United States is still the king when it comes to corn production. China would actually be number 2, but the 2025 U.S. corn crop is projected to be 225% larger than the Brazilian crop. So despite the big expansion in soybean production in Brazil, corn production is still the big deal here in the United States.
Sovicon has raised its forecast for Russia's wheat crop. The consulting firm estimates this season's crop at 86.1 million metric tons, up from the prior estimate of 85.4. The upward revision is attributed to improved yield prospects in certain regions. Similarly, Russian consulting firm ICAR recently increased its estimate for the crop to 86 million metric tons. Wheat futures settled higher on Monday, but remain under pressure from rising crop estimates in the Black Sea region.
This is like the 3rd or 4th week in a row they've raised their production estimate. Wheat did rally yesterday. I don't know why. Some people just cited short covering because there wasn't a headline anywhere. But the big Russian crop has provided some stiff competition on the export market. And U.S. export sales have been admittedly very, very strong. I think we had the chart on Monday, and it's the export commitments are the best of the last 10 years. It's just that the way that the balance sheets work, it's still not resulting in a tight situation.
U.S. corn shipments were strong last week. USDA reported that 57 million bushels of corn were inspected for export during the week ending September 4th. The print was up 2.4% compared to the previous week and up a whopping 70% versus the same week last year. Soybean shipments were near the upper end of pre-report expectations at 17 million bushels. The print was down 8% compared to the prior week, but up 24% versus the same week last year. Wheat shipments were reported at 16 million bushels. The print was down 47% versus the previous week and down 32% compared to the same week last year.
It's a great corn shipment. We're competitive. Soybeans, that's not really a bad number. The biggest importers of physical soybeans from the United States last week, I think, were you got all sorts of countries. Indonesia, Mexico was up there. Taiwan was up there. Algeria, Costa Rica, Indonesia, a whole bunch of different places, just not China. Everywhere that's not China is buying U.S. soybeans. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 12 cents to $1.02 higher, with the exception of the front month contract, which lost 17 cents. Feeders were 85 cents to $1.97 higher. Box beef prices were mixed. Choice was down $1.07 at $409.69, while select was up a mere 15 cents at $385.34.
Outside market's really quiet this morning. Guys, have a wonderful day. We'll be back on Wednesday.